Welcome to the deep dive. Today we're exploring a business structure that's, well, it's incredibly common. You see it everywhere.
Uh-huh.
Used by local entrepreneurs, global investors, pretty much everyone. It's designed for, simplicity and flexibility.
Right.
But that very nature um, sometimes opens the door to significant risks, especially when you get into financial crime.
That's exactly right. We're taking a closer look today at limited liability companies, or LLCs,
LLCs, yeah.
and we're using material from FinCrime intelligence. Our mission really is to understand what they are, why they've become such a go-to structure for, legitimate businesses,
Okay.
but also, and this is key, how they can be misused.
Mm.
And importantly, what's being done about that globally.
So think of it as trying to understand the DNA of a business type you encounter constantly, like
Exactly.
Main Street signs and
And
complex ownership charts in the news. We want to unpack why they're appealing
mhm.
and then really dig into the hidden complexities, especially when they're kind of pushed beyond what they were meant for.
And that tension, between being this accessible tool for business and also a potential shield for illicit stuff, that's the real story here.
Right. So drawing on our sources,
Mm.
how should we define an LLC? What's the absolute core idea?
Okay. At its heart, an LLC is a sort of hybrid business structure. It borrows bits from corporations, bits from partnerships.
Okay, a mix.
Yeah. But the single biggest thing, the main reason people choose it, is limited liability.
Right. That's the key phrase.
It is. For the owners, their members, it means their personal assets, their house, their savings,
Uh-huh.
are generally protected if the company gets into debt or faces legal trouble.
That's huge. I mean, protecting your personal wealth from business problems, that's a major draw right there.
Absolutely.
What else makes them so appealing based on the source material?
Well, beyond the liability shield, they offer just incredible flexibility.
How so?
You can manage the company yourself as a member, or you can appoint managers to run it. Taxation is usually passed through. That means profits and losses just flow through to the owner's personal tax returns.
Ah, so you avoid that corporate level tax.
Exactly. You avoid that potential double taxation issue you get with some corporations.
And they're known for being less formal than a corporation, right? Fewer hoops to jump through.
That's right. Generally fewer mandatory annual meetings, less extensive record keeping needed compared to, say, a C Corp or an S Corp,
Easier.
and often faster and cheaper to set up too. So you add it all up. Limited liability, flexible management, pass-through tax, simplicity.
Yeah.
It makes them super attractive for a whole range of ventures, especially startups, small businesses.
It really explains why you see them everywhere then. So thinking about that widespread use, where do LLCs typically show up for, totally legitimate reasons?
Oh, all over the place. They're incredibly versatile. Real estate is a huge one.
Right, for holding properties.
Exactly. Holding investment properties, development projects. Then you see them a lot with professional service firms like consultants, lawyers, accountants, grouping together.
Yeah, definitely see that. And in the tech world too, right? Startups.
Well, absolutely. E-commerce businesses, tech startups launching new products. The LLC is often the first structure they reach for.
Makes sense.
And also family-owned businesses, or sometimes they're used in estate planning. Even joint ventures between different companies might use an LLC structure,
Why there?
just for the ease and flexibility in setting up the partnership agreement within the LLC framework. Their popularity really comes down to being a great fit for so many different legitimate business needs.
Okay, now, here's where that flexibility, that ease, starts to show its potential dark side.
Mm-hmm.
How do those same features, the simplicity, the flexibility, make them vulnerable to being exploited for financial crime?
Yeah, this is where it gets really critical. That same simplicity, and especially in some places, the lack of transparency that can be abused. Well, one of the biggest risks the source highlights is anonymous ownership.
Meaning?
Meaning, in some jurisdictions, it's possible to form an LLC without actually disclosing who the beneficial owners are.
The real people pulling the string.
Exactly. The actual individuals who ultimately own or control the company. If that information isn't public or easily accessible to authorities, it creates a perfect veil for criminals to hide behind.
And that anonymity. That sounds like prime territory for money laundering. Can you break down how that might work with an LLC?
You bet. So criminals can set up what are called shell LLCs.
Show companies, right, just a front.
Pretty much. Often just an address, maybe a registered agent, but no real business operations happening, just a legal entity on paper.
Okay.
They can then use these shell companies in the layering stage of money laundering. That's where they move dirty money through lots of complex transactions to hide where it came from.
Obscuring the trail.
Precisely. And after layering it, they might use the LLC in the integration stage, maybe buying assets like real estate through the LLC, or just making the illicit funds look like legitimate revenue earned by this seemingly normal company.
Making dirty money look clean. Got it.
Mhm.
What are some other ways they get exploited, according to the source?
Tax evasion is another big one, using complex structures, maybe involving multiple LLCs in different countries,
Uh-huh.
to illegally shift profits around or hide income to minimize tax obligations.
Okay, that makes sense.
Fraud and Ponzi schemes, too.
Yeah.
Setting up a fake business or an investment fund under an LLC name can make it look more credible, more legitimate to potential victims.
Gives the scam that veneer of legitimacy.
Exactly. And we've also seen cases where they're used for sanctions evasion.
How does that work?
Well, individuals or entities who are under international sanctions, meaning they're prohibited from certain financial activities,
Right.
might try to use an LLC, maybe one registered in a different name or jurisdiction, to conduct transactions and access the financial system under the radar. Sneaky.
Very. And the source material makes it clear this isn't just theoretical. High-profile investigations into things like major corruption, drug trafficking, organized crime, they frequently uncover the misuse of LLCs to hide the money and the people involved.
So given this sort of dual nature, useful tool on one hand, potential risk vehicle on the other, what does this mean for banks, for regulators? How do they fight back against this opacity problem?
It means financial institutions, regulators, they all need to be extra vigilant. It really comes down to strengthening compliance measures.
Like what specifically?
Well, it starts with the basics. Know your customer, or KYC.
Right.
That means collecting detailed info when an LLC opens an account. What's its business purpose? Who's managing it? Where is it operating?
But just knowing the name on the paperwork isn't enough, you said earlier, because of the anonymity risk.
Crucially, no. You have to dig deeper into beneficial ownership verification.
That means actively trying to identify and then verify the identity of the real people who ultimately own or control that LLC, not just the person listed as the director or the registered agent who might just be a nominee.
Finding the actual humans behind it.
Exactly. Who's really benefiting? Who's really in charge?
And the scrutiny doesn't just stop once the account is open, right?
Absolutely not.
Yeah.
Ongoing monitoring is essential. You need to watch the transactions flowing through the LLC's accounts, looking for activity that doesn't match the stated business purpose. You know, if it's supposed to be a small local bakery LLC and suddenly it's receiving huge wire transfers from offshore shell companies,
Red flags.
huge red flag, or just patterns that don't make commercial sense.
And what about situations that just seem riskier from the get-go?
That's where enhanced due diligence, or EDD, comes in.
Okay.
If you're dealing with, say, an LLC formed in a jurisdiction known for secrecy, or one with a really complex, layered ownership structure involving trusts or other LLCs, or one that uses nominee directors, or shareholders, basically, stand-ins, then you need to apply much stricter scrutiny, EDD.
Meaning more checks, more documentation.
Yeah, potentially asking for more proof of identity, source of funds, more detailed explanations of the business structure and transactions, just digging much deeper.
And if, after all that, something still looks suspicious,
Then the financial institution has an obligation to file a suspicious activity report, or SAR.
okay,
That's the formal report sent to the country's financial intelligence unit, like FinCEN in the U.S., outlining the suspicious activity and why it raised concerns about potential money laundering, fraud, or other illicit finance.
so KYC, beneficial ownership, ongoing monitoring, EDD, SARS, these are the tools banks use.
They are key tools, yes. And what's really gaining momentum globally as a way to make that beneficial ownership part easier and more effective is the push towards beneficial ownership registries.
Registries, you mean like databases?
Exactly. Databases, maintained either publicly or by the government, that collect and hold information on who the true beneficial owners of companies like LLCs actually are.
Making it harder to hide in the first place.
That's the goal. Increased transparency right from the start.
This sounds like it connects to a much bigger sort of global movement, doesn't it?
Yeah.
Governments, international bodies pushing for more transparency generally.
Precisely. It's a major international trend. You see it clearly in the U.S. with the Corporate Transparency Act, the CTA.
Right, that's relatively new.
It is. And it requires many types of companies, including most LLCs, to report their beneficial ownership information directly to FinCEN, creating a national database.
And in Europe,
Similar push. The EU's anti-money laundering directives, particularly the 5th and 6th AMLDs, have mandated beneficial ownership registers across all member states. The aim there is often for public access, though that's been debated in courts.
okay,
And then you have the big international standard setters like the OECD and especially the FATF, the Financial Action Task Force.
they set the global AML-CFT standards.
Exactly. And their recommendations, specifically recommendations 24 and 25, are all about transparency and beneficial ownership of legal persons like LLCs and legal arrangements like trusts. They pressure countries to make sure this information is available and accurate.
So for anyone listening who works in finance, compliance, risk management, staying on top of these evolving global standards seems absolutely critical.
It really is. It's a dynamic area. And the source material really hammers home this central point. LLCs are incredibly valuable, legitimate tools.
Yeah, they fuel entrepreneurship.
They do. They facilitate investment, economic growth.
Yeah.
But to prevent them from being misused as vehicles for crime, you absolutely need robust transparency and strong governance frameworks in place. It's a balancing act.
So managing this risk effectively isn't just about individual banks doing their due diligence, right? It
Yeah.
requires more.
Definitely. It requires cooperation between countries sharing information. And increasingly, it involves leveraging technology. Using AI and data analytics to spot suspicious patterns across vast amounts of transaction data that a human might miss.
Right. Finding those needles in the haystack.
Pretty much.
Okay, so we've taken this deep dive into LLCs. We've looked at what they are, that core appeal for legitimate business.
The flexibility, the liability protection.
Then we explored how those exact features could be exploited for financial crime, the anonymity risks,
Yeah, the dark side.
and finally, the global efforts, the regulations, the registries, all aimed at bringing more transparency to this really common business structure.
That's a fascinating case study, isn't it?
It really is. It shows how a simple, useful tool like the LLC sits right at this intersection of, business innovation, finance, global regulation, and that constant fight against illicit activity. And understanding structures like this and the risks they carry really gives you, the listener, a much clearer picture of how the financial world actually works and the challenges within it.
So thinking about this constant push and pull, making it easy to start a business versus making it hard for criminals to hide. How do you think that balance between privacy and transparency might keep evolving, especially with new tech like AI and this drive for global cooperation? What strikes you as maybe the biggest ongoing challenge in trying to unmask who's really behind these companies?